Welcome to another BAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over BAR Area 2. This is Section J. This is a remembering and understanding topic. Recall the criteria used to identify reportable segments. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. Pro members get access to a lot of great stuff, including the Pro course, where Nate explains in detail exactly how you're supposed to be studying to pass the exams. It's like a much more in-depth version of the 1-hour webinar. And members also get access to the member versions of these walkthrough videos that I've created. Now, usually what that means is the YouTube version has 5 questions and the member version has 10 questions. Now, to be honest, for today's topic, it's a pretty straightforward, pretty simple topic, so it's another one of those videos where I'm only going to do 5 questions for YouTube and 5 questions for members. It's the same 5 questions both ways, but usually, again, members get access to a full 10-question version of the video so that they can get a little bit more help and a little bit more understanding. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA Pro member to get access to the full MCQ walkthrough videos. Now with that, let's go to the questions for this video. All right, here we are at the first question, and something I always like to point out in any question really is you want to read the last sentence of a question first. This is especially helpful on test day because you have no idea what you're going to be seeing in the questions. So reading that last sentence first frequently gives you context for what the question is about so that you know what you're supposed to be looking for throughout the rest of the question. Again, this is a very good habit for exam day, so you want to be doing it all the time. So let's do that here. Based on the 10% of revenues test, which of the following segments are reportable? Let's go up to the top. On January 1st, Year 1, Northwind Corporation has 3 operating segments with the following revenues. Segment A, 200,000 sales to unaffiliated customers, 50,000 intersegment sales, total revenues 250,000. Segment B, 100,000 sales to unaffiliated customers, 25,000 intersegment sales, 125,000 revenue. Segment C, 20,000 sales to unaffiliated customers, 5,000 intersegment sales, total revenues 25,000. Total revenues for all segments, including intersegment sales, are $400,000. Now, I'm going to be honest, this is one of those questions where pretty much everything you need to know is right there in the question, even if you didn't know much about this beforehand. So carefully think through that, carefully read through it, and look at these options and see if you can get it right. Is it segment A only? Is it segment A and C? Is it segment A and B? Or is it all of the segments? Again, I think that this is one of those questions where you could figure it out on your own just by reading through this. So go ahead and do that, and when you're ready, come back. We'll look at the answer together. All right, here we are at the answer C. Segment A and B are reportable segments. So let's go through this. Under the 10% revenue test, a segment is reportable if its revenue, which by the way includes both external and intersegment sales. So all the sales, whether they're intercompany, intersegment, or they're external, count for this. And so if the revenue is at least 10% of the total revenues of all segments of like the whole company, then it's going to be counted as a reported segment. So total revenues is the 250,000 plus 125,000 plus 25,000. That's 400,000. And by the way, in these questions, the revenues from the segments that you see in the question might not always add up to the total revenues for the company. So just make sure you're paying attention to that. But in this case, it did. So these are the only segments that the company has. What is the threshold? It's 10% of the total revenues. So 10% of 400,000 is 40,000. So any segment that has revenue over 40,000 is going to be reported. So segment A had 250,000. That's definitely reportable. Segment B had 125,000. That's definitely reportable. Segment C only had $25,000 of revenue, and that's less than the $40,000 of this threshold. So it's not reportable. So in this case, only A and B are reportable segments because they have 10% or more of the total revenue as their revenue. So we learned one of the ways to figure out a reporting segment in this question. Now let's go to the next question. All right, here we are at question 2. Let's go through this and do the same thing. Based on the 10% tests of revenues and assets, which segments are reportable? Okay, so this one is adding something that we haven't seen before. On January 1st, Year 1, Marigold Inc. has the following operating segments. Segment A, 300,000 sales to unaffiliated customers, 50,000 intersegment, total revenues 350,000, assets 600,000. Segment B, 90,000 sales to unaffiliated, 10,000 intersegment, total revenues 100,000, assets 250,000. Segment C, 40,000 sales to unaffiliated, 10,000 intersegment, total revenue is 50,000, assets 200,000. And then segment D, 20,000 sales to unaffiliated customers, 5,000 intersegment sales, total revenues 25,000, assets 50,000. Total revenues for all segments, including intersegment sales, is $525,000. Total assets for all segments is $1,100,000. So again, based on the 10% tests for revenues and assets, which segments are reportable? Now we learned about the 10% revenues test in the previous question. How does assets play into this? Is it both of them together? Is it separate? Is it one or the other? If you don't know, that's okay. We're going to go ahead and look at the answer, but if you want to give this a try, pause the video, and then when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B. Segment A, B, and C are going to be reportable, but not segment D. So let's go through this, and we'll learn a little bit more based on what we learned in question 1. The 10% tests require a segment to be reportable if it meets at least one of the following. So it only has to meet either revenues, assets, or profit and loss. And we're not going to be talking about profit and loss in this question, but maybe we will in the next question. So we're focusing on learning one more aspect, which is the assets. So again, if they meet one of these, so if they have revenues, and that's external plus intersegment of greater than or equal to 10% of total segment revenues, it's reportable. If it has assets that are equal to or greater than 10% of the total segment assets, that is also reportable. So it's either one. So in this case, first we look at the revenues test. Total revenues is $525,000, so 10% threshold is $52,500. Segment A definitely has more than $52,500. Segment B definitely has more. Segment C does not. So if we were just looking, or if we only had information for the revenues test, segment C and segment D would not qualify as reportable segments. But we also can look at the assets. Total assets is $1,100,000. 10% of that would be $110,000. So any segment that has more than $110,000 of assets will also be, or could be, a reportable segment. So segment A already was reportable through revenues, but it would also be reportable from assets. Same with segment B. It's already reportable from revenues, but it could be also reported from assets. Now, segment C wasn't reportable before when we were just looking at the revenues, but it has $200,000 of assets, which is greater than the $110,000. So that means that it meets the assets test, so it still qualifies as reportable even though it didn't qualify under the revenues test. Now, segment D is below the assets and below the revenues test, so it's not reportable either way. So A and B are reportable either way, and C was only reportable through the assets, but again, it only has to meet one of these tests. So we've covered 2 of the 3 tests. We know that there's a profit or loss test as well. So we're going to learn about that in the next question. So let's go ahead and go to question 3. All right, here we are at question 3. Again, similar idea here. Based on the 10% test for revenues, assets, and profit or loss, which segments are reportable? Now, we've learned about revenues and assets. We haven't learned about profit or loss, but it's probably pretty similar based on what we've learned. So let's go through this. They had the following operating segments. Segment A, 300,000 sales to unaffiliated, 50,000 intersegment, total revenues 350, assets 200,000, profit 5,000. Segment B, 60,000 sales to unaffiliated, 10,000 intersegment, total revenues 70,000, assets 400,000, profit 3,000. Segment C, 40,000 sales to unaffiliated, 5,000 intersegment, total revenues 45,000, assets 100,000, profit 60,000, and then finally that all totals across all operating segments. Revenues $465,000, assets $700,000, total profit of profitable segments $68,000, and there were no loss segments in this question. So based on the 10% tests for revenues, assets, and profit or loss, which segments are reportable? Now, based on what we have learned in the previous 2 questions, you could probably figure this out just based on what you know. You could probably figure out how the profit one fits into this. So pause the video, think through this, and when you're ready, come back. We'll look at the answer together. All right, here we are at the answer. D, all 3 segments. And, that probably wasn't too difficult, but we're just kind of building off of what we've learned so far. A segment is reportable if it meets at least one 10% threshold. So again, it only has to meet one of these. Revenues, and that's including external and intersegment, assets, or profit and loss. 10% of the greater of total profit of profitable segments, or the absolute total loss of lost segments. So it could be either 10% of total profit of profitable segments, or it could be 10% of losses. So if a segment has more than 10% of the total losses that the segments had, then that would also mean it's a reportable segment because, there was a more than 10% loss from that segment. So that's the final piece to this puzzle that we haven't learned yet. So there's a revenues test, an assets test, and a profit or loss test. And it just has to meet 10% for any one of those, and it will be a reportable segment. So let's go through this. Revenues test. 10% of $465,000 is $46,500. Segment A meets that. Segment B meets that. Segment C doesn't meet that. But now we go on to the assets test. 10% of $700,000 is $70,000. Segment A meets this one as well. Segment B meets this one too. And segment C meets it as well. So we wouldn't even have to go look at the profit or loss test necessarily because we already know these are reportable, but you still probably have to look at it. So profit or loss, greater of $68,000 of profits and $0 of losses. There were no losses, so we're just looking at the $68,000 of profits. So it has to be greater than 10%, which is $6,800. So segment A only had $5,000 of profit, so it didn't meet that. Segment B only had $3,000 of profit. It didn't meet that either. Segment C had $60,000 of profit. So segment C met the assets test and the profit or loss test. Segments A and B only met the revenues test and the assets test. They didn't meet the profit or loss test. But again, it doesn't matter. As long as it meets one of those tests, then it's a reportable segment. Each segment meets at least one, like I said, and so therefore they are all reportable. So with that, let's go to the next question. All right, here we are at question 4. So now we know all of the different tests that you can perform, but I just wanted to throw one more piece at you to kind of make sure that you understand, especially the revenues test. So let's go through this. On January 1st, year 1, Horizon Co. has the following operating segments. Segment A, 180,000 sales to unaffiliated, 40,000 intersegment, total revenues 220,000, assets 300,000, profit 20,000. Segment B, 50,000 sales to unaffiliated, 5,000 intersegment, total revenues 55,000, assets 150,000, profit 15,000. Segment C, 20,000 sales to unaffiliated, 5,000 intersegment, total revenues 25,000, assets 100,000, profit 5,000. Additional company-wide items that are not attributable to operating segments: interest income of $25,000 and dividend income of $10,000. Total segment revenues, including the intersegment sales, was $300,000. So this is the only question so far that has included something about interest income, dividend income. How does that play into figuring out if something is an operating segment? So pause the video, try to figure this out based on everything we've learned so far, and then when you're ready, come back, we'll look at the answer together. All right, here we are at the answer B, segments A and B only. Now let's go through this. Again, we've already learned this, and I was trying to trick you a little bit to make you think that maybe you had to pay attention to those other things, but it really is pretty simple. For the 10% revenues test, segment revenues include external and intersegment sales for each segment. Corporate items like interest and dividend income are excluded. So if you see anything that's not specifically external sales or intersegment sales, if it's like interest income from a loan or something like that, it's not going to be included when you are trying to figure out if a segment is a reportable segment. So again, this one's really not that difficult once you understand that rule, and I wanted to make sure that you knew that. So again, 10% revenues test, total segment revenues is $220,000 plus $55,000 plus $25,000, that's $300,000. So the threshold would be $30,000, and that means that A is reportable because it's over $30,000. Segment B is reportable because it's over $30,000. Segment C is not reportable because it's under $30,000. And again, we are only basing this off of the revenues test in this question specifically. We were given information for the rest of the stuff, but that could have thrown you off because it specifically was asking to only focus on the revenues test. So you've got to pay attention to what the question is truly saying, because you could have let yourself get tricked by, oh, well, it could qualify under the assets or it could qualify under the profit or loss. Again, this question specifically said only on the 10% revenues test. So you've got to pay attention. That's why only A and B are reportable in this case. And again, corporate items like interest and dividend income are not included in this revenue. So with that, let's go to the last question. All right, here we are at question 5. Based on the reporting sufficiency test, which we haven't talked about that yet, how much additional external revenue must be included in reportable segments for the company to meet the requirement? Let's go up to the top. Northwind Corp has identified the following reportable segments under the 10% tests. Segment A, $250,000 external revenue, $100,000 intersegment revenue. Segment B, $100,000 external revenue, $50,000 intersegment. Segment C, $50,000 external, $150,000 intersegment. Total company revenues, and that's external and intersegment, is $900,000, of which $600,000 is external. So again, based on the reporting sufficiency test, how much additional external revenue must be included in reportable segments for the company to meet the requirement? Again, this is the one thing we have not talked about at all yet, and if you don't know what that even means, that's okay. We are using these questions to learn what we're supposed to know. If you've heard about the reporting sufficiency test, you might have an idea or you might have a number in your head, so pause the video and think about it, but when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is A, $50,000. And again, you might not have had any idea how to do that based on the previous questions, and that's because this is a new topic. The sufficiency test requires that reportable segments collectively include at least 75% of total external revenues. So the total external revenues is $600,000. And the 75% threshold of those total external revenues would be, again, 75% of $600,000. So $450,000. That's the threshold for sufficiency, that they're sufficiently reporting enough for the segments. Current reportable segments external revenues is only $400,000, and that's because you add up $250,000 plus $100,000 plus $50,000, that gives you $400,000. So they are only covering $400,000 of external revenues when they need to be covering, for sufficiency's sake, an extra $50,000. And this is just an extra rule on top of all the things that we've learned. So therefore, at least $50,000 in additional external revenue from another operating segment, or maybe multiple operating segments, must be reported. Intersegment or internal revenues are not considered in this calculation. So everything we've talked about so far, you do look at internal or intersegment revenues alongside external revenues when you're trying to do the 10% revenue calculation. But when it comes to the sufficiency reporting test, you are specifically only looking at external revenues, and it has to meet that 75% threshold of total external revenues. So if the segments that you're looking at don't cover at least 75% of the total external revenue, then you have to find more segments to report. Even if they weren't reportable segments previously, now they have to be reported because they have to be used to meet the 75% threshold. So again, this is just one additional rule, and that was the last piece of the puzzle. Now, before we do anything else, let's do one more part of the SuperfastCPA process called Pillar Topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you about the different 10% rules when it comes to reporting a segment. Or, maybe you've seen 2 or 3 questions trying to teach you about the sufficiency test. Whatever the case is, you notice these things in the questions you're doing in your review course, and so you take a moment and write them out in your own words as pillar topics, as key points based on what you learned, so that you are ready for the exam when you get to the exam, because again, you have been building your own personal repository of the important things you need to know based on the questions you did so that you're ready for the exam. So let's go ahead and take a look at the pillar topics for this video. Okay, here we are at the pillar topics. Let's just go through this. A segment is reportable if it meets at least one of the 10% tests. And again, this is pretty simple once you understand it. Revenues, and that includes external plus intersegment, or profit or loss, or assets. So it has to just meet 10% of any one of those, and then it is going to be a reportable segment. The test compares each segment to the total of all operating segments, and you might not have all the information of all these segments in the question, so you need to be paying attention to that. The sufficiency test requires that reportable segments together cover at least 75% of consolidated external revenues. Only external revenues are counted, intersegment revenues do not apply. And then finally, and this I was kind of getting at this at the very end of the question, if the 75% sufficiency threshold is not met, additional segments must be reported even if they do not meet the 10% test. So you do the 10% test, but if that doesn't reach the 75% sufficiency threshold, then you still have to get other segments, even if they didn't meet the 10% test, to be able to reach that threshold, and you have to report those as well. This ensures users of the financial statements see enough detail about the entity's external revenue sources. And with that, again, we've gone over the pillar topics, and in this YouTube video, we are only going over 5 questions, and for members, we're also only going over 5 questions. But normally, members get access to an extended version of these videos where they get an additional 5 questions that I go over with them to help them. But this was a topic that was very straightforward, very simple, and I just felt like it wasn't needed to do 10 questions for anybody. So 5 questions for YouTube, 5 questions for members. But if you like this and you like our other videos, make sure you still check out becoming a Superfast CPA Pro member, because Pro members get access to the full versions of the videos, and they get access to the Pro course where Nate explains in depth exactly how to pass the CPA exams. And the easiest way to learn about and become a Superfast CPA Pro member is actually by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the exam, and then again, that will give you a great way to learn about and become a Superfast CPA Pro member. So check out the webinar, check out becoming a Pro member. I hope this video was helpful. If you did find it helpful and if you liked it, make sure to like it and leave a comment, and I will see you in the next one.